Morning, guys, and look at that market. We are in a free fall. Look at that thing. So yesterday, first trading day of March, started off good, turned into the disaster. All about the upcoming tariffs are on now. I guess Canada is fighting. I guess Mexico going to do something. We'll see how long that whole thing lasts, but it's tariffs are up, and if I understand it, is the it's not so much a trade issue as it is to stop that fentanyl flow, especially through Mexico, but also through Canada. And I think that's been highlighted as the main reason for it. We'll see if that can change pretty quick. Anyway, so market is just not taking that, no matter what the reasons are and the motivations and the end goals, the market is having a hissy fit. So you know that, and that's a technical term. A market hissy fit, and we are heading down into territory we haven't been for quite a while. So we were up here against that 61.50s here for a while, and that was back at in February 20th. So we are like 2 weeks after that. And now we are looking at them blowing through the 5,800 level and potentially down here testing that 57 levels. So we are well into a pretty good move to the downside. These are levels we haven't seen since back in September, October, and we are right down here again. So 57, 50, 30 to, well, what is that? 57.30 is this support area. That's going to be the ledge to pay attention to. Right now, they're stalling at this area, an area of congestion, and not necessarily. Well, it's a pretty good area of congestion, but I'm not sure the market is quite ready to stall here. And we'll see. It looks to me like the pre-market is pretty weak, so I guess the selling may continue, and that's how we're going to be starting off today. Looking to sell strength for rotations back down. Capital flow is pointed lower. Exchange member chart is pointed lower. Trade is on the short side. And there's no reason to step in front of this market as a trying to get the big buying opportunities. There may be scalping opportunities, but the market is heading lower, and don't step in front of it. So we are in the move out of the middle to the downside. I thought for a while we had a shot at stalling here around that 59.60s. But this tariff thing is, as the market is having a it's having a heartburn about it. There's other reports out there if you haven't heard. It's has to do with the recession fears, and people think that the Doge is going to create a recession, or the lack of government spending is going to create a recession. But you're gonna have to shake your head for people saying that, yeah, well, if they count government spending as GDP, which is not quite not quite what it is it's taxpayer money. It's our money they're turning around and spending, especially when they're spending it on junk and crap and wasting it. I'm not sure that counts as waste. So I think they can cut quite a bit without cutting into anything which actually buys something. I mean, if the government actually buys stuff, it contributes to GDP, but if they send it to these looking good, feel good groups, obviously that's not going to create GDP. So the GDP story, they're talking about the potential contraction in the first quarter. So that story, as well as the tariffs, is what's spooking the market. We'll see how this whole thing shakes out. At this point, the market is heading lower. So look to sell strength at this point. Looking to sell against the 58.30s. 58.45s, the 58.60s, 70s, up to the 58.80s. Now, 58.80s takes us up here to this area, an area of resistance now. It used to be support on the way down. Now it's going to be resistance. If they can trade up above that, we may have a shot at getting back here to the 5900s. But right now, I would be looking to sell all the way up to that edge, 58. 80 to 90, and let's see if they can scratch up above it after that. If they can get up above this area, the 59.15s, that ledge, that's where well, support on the way down started there, and the support was all the way down here to the 58.80, so this general area. But if you can get up above that area, 59.15, I think we have a shot at getting back up to the 59.60, maybe save the free fall to the downside. We will see. At this point, though, I traded from the short side of the market. Pretty easy call to get started. Just be very, very careful trading this because it is a fair amount of cross currents going on. And as I said, on the way down, looking for buying opportunities against that 5800 to 5810, kind of what they are right now. That could be a buying opportunity for a shorter term scalp. And also down here at the 5730s could be another buying opportunity. But these are big areas, and there's a lot of range right at the edge as well. So it's not like, yeah, just get long right there. You have to be really cautious about it, and there's no rush to get long against a move like this. If you trade from the short side, it's kind of, I would be more inclined to try to stick with a trade like that. So looking at the sell strength, 5830s, 5845s, 60s, 70s, 80s, rotations back down again. Above the 5880s, may take off the short bias for the day session at least. And let's see if you can get up above that 58 or 5915. It was going to be up here. If they can retrace it that far back, well, yeah, we may have a shot. But that would imply we'll have a pretty good pop rally day for that market to trade up like that. But as you see, when it's volatile like this, the market can move pretty freaking quick. So you get some deals come out and the tariffs come down. You'll probably see this whole thing reverse and then some. So that's the nature right now. The reason I'm cautioning this whole thing, it's just super volatile. And this bar right now, this bar here, 58.19 to 26. These are big bars. 58.16 to 23. So they got 7-8 point bars, and that's in the pre-market. So yeah, there is plenty of range. And when the market kicks in, these bars are going to be 10 plus point bars, and you just have to be cautious trading it. It's a good trade location, and you probably have to increase your stop size to get on a trade, and not just to get flat out shaken out of the trade. So we will see how this whole day shapes up, but at this point, traded from the short side of the market. Let's see how far they can take it on the downside. If sometimes the selling occurs mostly prior to the event, so buy the rumors tell the fact kind of dynamic. In this point, as long as the tariffs are on, I think there's still enough uncertainty out there for the market to keep their hissy fit going. So, and that's a technical term. If you were wondering. So trade ES on the short side of the market, Nasdaq as well, a massive loss of value. I'm watching Nvidia down here at the 110, from 150 to 110. That's like a 40% decline in value on Nvidia, like just like that. That's pretty freaking. That hurts, you know. There's a lot of people with big positions in that stock, which is just getting hammered. So, but. Nasdaq and bond. Let's start with the bonds real quick. Bond market is just it has a flat out flight to safety going on right now. So the bond market is going higher, yields coming down, and they're right up here against this upper edge at the 119. Probably going to be looking at the test of the 120s here in short order. So yields coming down, and bond markets trading higher, most likely because of these. I think that's more of a recession fear. Flight to safety, just driving those yields lower. People buying, the demand for treasuries, but also I believe the recession fears. It's yields coming down or expectations on that coming down. So anyway. At this point, I think the bigger driver here is really the flight to safety, just rotating into treasuries, creating a good buying frenzy there, driving this lower. When it comes into those macroeconomics reasons why it would stay low or keep driving it lower, I know the Besant guy is the new Treasury Secretary. Has been working. It's stated pretty public that he wants this yield to come down, the 10-year yield. So it's going to be something which. Going to be a focus of the Treasury to drive down. But anyway, I think the main driver on that is really the flight to safety right now. So looking to buy weakness at this point against the 119. Well, that's too late. Against the 1828s, 1824s, 22 to 24s down to this edge at 1816. to take out the 16, take off the long bias for the day session, and look for maybe rotation bound down here towards the 118s. But at this point, I would be looking to buy weakness for rotations back up. Not going to be very aggressive on a short side on the bonds at all. Nasdaq is the one which has taken a beating and a half, down from 22,000 to 20. So we are now 2,000 points to the downside, a good 10% on the downside on the Nasdaq, and looks like we made new lows here in the pre-market. So Nasdaq is just trying to stretch my little F1. You see the same dynamic here. Here's your Nasdaq support area, 20,000. You're at that support area right now. It's going to be down here at the 2200s. This is your support area for the volume edge right there, and it's a support area. So here they could stall here. If they keep going, the next step down is going to be a tractor just here at the 20,060s, and then a support area here at 20,000. So this general area is where I would expect them to get support next. And if they keep going from there, we are back here in pre-September territory. You know, it's going to be we can get really gnarly. We can get into all this stuff and then below 20,000. So remember, we had the hardest time getting above 20,000, and when that happened, we had a pretty good move to the upside. But so far, a reverse retest of 20,000, maybe even down towards the 19,000. That could be a pretty ugly scenario. Then we are back here, giving back maybe year and a half worth of value. So that is pretty crazy, but we'll see how that shakes out. At this point, looking to sell strength on the Nasdaq, same as the ES. At this point, against the 360s, 20,000 for 425s, the 460s, the 520s. 560s up to the 580s, 590s. So if they can trade up above the session highs, we may have a shot at stopping a pause day of some sort. But at this point, looking to sell strength all the way up here to the session high. The London high gives you, if they start taking that out, maybe have a shot at turning this market around for a intraday. But not sure what's going to happen. There's not much news to drive the market today, by the way. I didn't even talk about the calendar, but it's just absolutely no news to drive the market. So I just had to kind of watch this thing and see how it develops. So looking to sell strength on the Nasdaq, 355 to 60s, 430s, 460s, 520s, 550 to 60s, up to the 590s for rotations and back and down again. And then we'll see how this whole thing shakes out. If they keep going lower, capital flow tells us that we have a support to take out the support, and next stop is going to be down here at the 20,000s. So that's how far they can take it pretty easily. So right now it feels very much like a free fall, and we'll see what when and what news we're going to get, which is going to potentially stop this. It'll move to the downside. So that's the Nasdaq. Looking at oil and gold, and you're looking at a pretty good move to the upside on gold, kind of a flight to safety, I would say. Now it's starting to feel like, yeah, gold, people start looking at gold like, okay, I'm not so sure anymore. I'm going to just buy gold. So they're right back here again. So we were down here testing these lows. Last couple of days, these tariff threats, gold is starting to act more like a flight to safety again, and that's pretty much. I think that's when things are really shaky, and I think people think that right now, and with the tariffs coming up, uncertainty, everything is changing in terms of how we deal with it, deal with the rest of the world, and the markets are freaking out a bit. So people buying gold is just protecting themselves. Hoping for just trying to protect their money. Now the tariff thing is like the Mexico-Canada tariffs, as I believe, is all about the fentanyl flow. The other trade deficit deals are going to be handled using those reciprocal tariffs as they come out in early April, and that's going to be more settling the trade imbalances. But I think this initial thing is more about stopping that fentanyl flow. And I think they've been pretty public about that, the reason for it. And the fact that Canada and Mexico are not doing that. Mexico, I understand, not doing anything because they're kind of so corrupt. But it's Canada, I thought they would be more aggressive about making changes there to avoid these tariffs. Anyway, we'll find out. Let's trade gold from the long side at this point. So look to buy weakness on gold at this point against the to my edge here. It looks like it says tiny bit higher, but I mean, let me see how that looks. Yeah, so they had one edge up here. So looking to buy against reverse retest. They took out the 2930s now, so that's going to be support. So looking to buy the 33 pullback, the 27s, 23s, 17s, down to the 10s for rotations back up again. I would think if they take out the 22s, I may take off the long bias for the day session, and let's go back range bound. But at this point, they're going to buy at least against these first levels of support, and then we'll see how they shake out from there. And on the way up, not going to be very aggressive on the short side. I think flight to safety is kind of driving gold as well at this point. So we'll see how far they take it. And then finally, oil heading lower, down at the 67s. Maybe we're going to see oil finally break below the 67 mark, and that's a welcome sight. Now the reason for it may not be the exact what you want. I mean, it's not necessarily the production input or the production amounts which are driving this. Is more the fear of recession, I think, driving oil prices lower right now. Like the lack of demand, but it's not so much the supply side of it. But I'll take it any day of the week. I said that even under the prior administration. Even if it's not the great idea, the reason you kind of want, you'll take it, right? So lower oil prices are going to be happening. See how far they can take it. At this point, there may still be a buying opportunity against the 67.40 or the 67s. They haven't quite busted through it yet, but once they blow through the 67s here, I think it opens up to the downside quite a bit. There's not much below that to lean against. So I haven't been there for a while, and I'm thinking prices can drop pretty hard. All right, so trade oil from the short side to get started. Still potential buying opportunity at the 67.40s and the 67s for rotations back up. But looking to sell strength, 67.80s and the 68.40s. Above 68.40s, just take off the short bias and go back range bound, then they're back in this range again. So look for shorts against 67.80s, 68.30s for rotations back down. Look to buy against the 67.40s and 67.10s. Rotations back up again, that potentially could still hold. And if they trade up above that 68.40s, as they go back range bound for the trading there. All right, so that's in the oil. So trade oil, slight bias to the downside to get started. Gold from the long side. ES and NASDAQ, yes, from the short side to get started, and bonds from the long side of the market. All right. So that's how we get started. I'll see you guys back at 11:30 for the next update. So good trading, and I'll see you back then. And be cautious. It's pretty freaking volatile out there. So I'll see you back. Oops. Can't spell for shit here. Hang on. Good trading, guys. All right. I'll see you back at 11:30.